Next time you see a headline screaming about how the economy's never been better, ask yourself, who's telling you this, and what exactly do they want from you? The news lately makes it feel like the economy is absolutely crushing it, right? Stocks hitting records, rates chilling out, banks are practically begging you to take out a loan. Looks great on the surface. But honestly, it's a trap. It's exactly what they want us to think while they quietly pull the rug out from under our jobs, our houses, and our credit. Even Michael Barr, the guy at the Fed who handles bank supervision, is sounding the alarm. He just gave a talk in DC called Deregulating in a Financial Boom. What could go wrong? Here's the translation. The higher we ride this hype train, the harder we're going to faceplant. Look around at the people celebrating the market highs. How many of them do you think are actually checking their emergency funds? Barely anyone. Right now, there's a massive push to cut capital requirements for mega banks by 6%. 6% sounds like pocket change, right? But these 8 massive banks control over half of the entire country's banking assets. Shaving off 6% means wiping out roughly $60 billion from their emergency safety net. That missing cushion is the only thing that keeps banks lending when things get ugly. You take that away, and they'll panic the second the economy sneezes. They won't refinance your mortgage. Small business loans will vanish overnight. And your credit card rates skyrocket. The party Wall Street is throwing today is literally being charged to our future. Sure, short term, it looks awesome. Bank CEOs get their massive bonuses, and maybe a bit easier for you to get a car loan. But long term, the moment inflation takes a weird turn, the people who stretch themselves too thin to buy a house are going to get absolutely wrecked. Banks will freeze credit lines to save their own skin, while the news keeps telling you everything is fine. It's like being on a cruise ship. When the weather is nice, everyone complains that lifeboats take up too much space on the party deck. But when you hit the iceberg, it's the only thing that keeps you alive. So here's my game plan. First, don't over-leverage. Just because a bank says you qualify for a fat loan doesn't mean you can actually afford it. If your industry goes sideways, you need enough cash to survive a few months without sweating. Second, watch your investments. Not because I'm a pessimist, but because high risk is being baked into the system right now. Just don't let FOMO trick you into buying garbage assets just because everyone else is doing it. Third, read the fine print. When rules get loose, consumer protections go out the window. Wall Street always gets a parachute. We don't. Look, Barr isn't trying to be a doom scroller. He's just saying, fix the small leak before it becomes your whole basement flooding. Build your cushion. Because the storm doesn't send a warning text. I'm not asking if the economy will crash. I'm asking, has a bank ever loosened lending standards in a boom and had it end well? Name one time. I'll wait in the comments. Stay safe out there.